Hello. Excuse me, everyone. Hello, hello, hello. Happy what? +1 Liberation Day. Day after Liberation Day. Don't you all feel liberated? So, how's everyone doing? How's everyone good? Good margin call Thursday. Some people will. Again. You know what's funny? We're gonna get some downwards pressure, but the rallies are actually fun in these kind of markets. When you get the snapback rallies, they're actually fun. They're actually decent to trade. They don't last long sometimes, but they're actually decent to trade. Not saying that's what's going to happen today, but we'll get to where some people will throw in the towel. So what else? Yeah, Powell's speech on Friday will be interesting. We'll have to see if he comments on policy. My stance has not changed in the Fed. Can we just get rid of it? That pretty much sums it up, Sterling. There you go. Good morning, Jake. Yeah, the settlement futures was very strange yesterday. I don't have an answer for it. I don't have an answer for it because we had the sell-off trigger well before. It also, it hit another key harmonic level. This is why you trail stops, especially on bounce patterns. You trail stops, and they gave you plenty of time to get out. If you were long, on the percent beat buy bounce or any other reason, it gave you plenty of time to get out. It hit our first cluster yesterday. I posted that on Twitter. Hit both the clusters on ES and NASDAQ, and then it kept going higher and hit another key area. I'll show you what I put up. And then, you know what? If you're still trailing, yeah, you get stopped out on the remainder. But that's just the way it works. That's the way trading works. Yeah. Gold's down bigly. Wouldn't it be Liberation Day +1, McRangers? Good morning, John. Good morning, Daniel. Well, they probably will, but it wasn't the way the tariffs, our tariffs were put into place was not based off their tariffs, though. So let's say they go to zero. We didn't calculate it based off their tariffs. We calculate based off the trade imbalance. So if they take their tariffs down and the trade imbalance remains, because again, it's not going to magically fix even if they take their tariffs down. You're still going to have trade imbalances. It's also the nature of having a reserve currency. Good morning, David. Hello, Charles. So we have lots of things in. How about WTI? Well, again, how about the dollar too? Hello, Harold. Good morning. Good morning, Martinez. Good morning, Jacob. Good morning, Heinrich. All right. So, lost in the tariff shuffle. We saw some numbers coming out this morning. We had initial jobless claims coming in slightly better, but continuing jobless claims, pretty big pop. Pretty big pop in continuing jobless claims. Consensus was 1860. Prior was 1847, 1903. I have to see if that sets a new trajectory. What other numbers we have? We have the S&P Composite and Services coming out 15 minutes after the cash opened. But more importantly, we have the ISM services, especially the ISM services employment numbers and the prices numbers, which are already elevated. So that is important to watch at 10 a.m. Eastern, 30 minutes after the cash open. And then we have Jefferson speaking and Cook speaking before the markets close. So keep an eye on that. Remember, tomorrow is non-farm payrolls. Tariffs are still going to, the tariff news and any news relating that is still going to trump the day, should we say. It's pretty red this morning. Healthcare, little rush into healthcare today. You have some consumer defensive trying to hold up, but a lot of other stuff is really getting hit hard. So groups, nothing positive. We'll just do a quick refresh of this. Nothing positive today. Healthcare is holding up the best, but you see consumer cyclical technology, energy, just consumer cyclical and technology down over 5%. Fed watch still has 3 rate cuts. One in June, like the economy is going to fall off a cliff now. One in July, one in October, and then another one starting in January. So, but still 3 this year. I have to see if that changes at all. Fear and greed still in extreme fear. Schiller PE 35, that's going to drop today. In terms of earnings, There is not much. There is not much. We had Restoration Hardware yesterday, but there's nothing, and tomorrow is nothing. So overall, and this is what, so you started to get yesterday. Here was the big, so we came up, here's where the harmonics were yesterday, giving us this very key cluster. We came up there, smacked it right there, came back down. I then raised my harmonic levels to this pausing bar in the shorter term, which gave me the next level of about 57.65. We spiked through there, and here was the reversal. Here was the actual futures close. Here's the way it was settled. And then, so you don't see this reflected, you don't see the drop, but the drop happened before the futures closed. So it gave time to get out. And I was actually wondering, that's why I actually had these levels drawn, this little channel drawn before. I'm like, all right, we're rallying. Maybe we're going to break out of the upside, and then boom, tariff announcement. We broke through the bottom. I had this on too. We had this. Just showing you what I was looking at. Then I said, okay, well, we're well below the 62.5, so we should retest the lows and probably break them. So that's what I had. Well, that's what I was watching. There we go. So today we do have a little mini potential. This might break on the open and never even trigger. So because we still, remember, have to complete the double. Doesn't have to happen, but we still have the double top in play, the longer term double top. But if it did bounce, that's the pattern to keep an eye on. All right, that's the pattern to keep an eye on. That's what I will be keeping an eye on, at least. Let's see. Good morning, Anissa. Good morning, Royal Palms. What are the trading halt? Oh, I have to always look them up. We're not near them yet. It's Sterling, could you look up the trading halt and put them in the chat? I don't have them memorized because they don't happen very frequently. I always have to look them up. Yeah, I literally, because I'm not going in each day expecting a trading halt. But we do have a potential minor set up. Remember, if things don't follow through with the close, if you're trying to trade this and it doesn't follow through with at least a 1 hour close, I wouldn't be holding it. Because there could be lots of volatility. Now to the downside, so that's the upside. Let's look at those levels. You're roughly about 56.06, 56.26, 56.48, 56.50 area. Good morning, Richard. Good morning, PMG. Well, thank you for tuning in. Thanks, MJ. I just don't have a, are we going to go memorizing this kind of stuff that happens so infrequently? You just Google it. And I can't Google it when I'm on the live stream. But I guess I should have been preemptive and Googled it. Because still, we have the rollover plays. The next key level, we have a harmonic cluster at this 54.65 to 54.68. So that is key. If it trades below 54.27, which is the reverse harmonics, that invalidates any potential double bottom. Now, this double bottom on the daily has been invalidated. It is only tradable on a weekly. So I'm not talking about this little 1 hour one. I'm talking about the bigger pattern that's still in here. This would require a weekly close. We talked about this and I said I'd need a weekly close anyways. If you could trade on a daily close, as I talked about on Futures Edge, this now needs a weekly close above this level. So the market's got to do a lot of heavy lifting. Okay? So just keep that in mind. Now, as I talked about also, the 53.30 area is my major next target. That doesn't mean it has to stop there. And then you have the 87.5 rule, which is 52.60, 75. Then we can project stuff lower, potentially. We'll have to see. But it's more important to trade what is going on, and unless we make some kind of bottoming pattern, and even with a bounce pattern, it would only be a potential rollover play again. So I would not be trying to bottom pick unless we get massive momentum. All right, level 1 is a 7% drop from the previous day's closing. Is a 15-minute halt, unless it, yeah, and then the 13% drop, and we're at only 3.5, roughly 3.5%, just a little worse than 3.5%. So you're gonna have to see a pretty big rout, but we could be getting some margin calls today. That's also why you're not just seeing a slow. We're pricing a slowdown, but people are gonna. This is where we could be seeing a more important top. Remember, I talked about this, and Jim talked about this. We were watching for a topping pattern. It came up to this 13,196 harmonic, 13,200 area, and then major reversal. People also to cover stuff. They sell things that were very strong winners. Now, does this bother me in the overall huge thing with gold? No. Gold could easily return to the weekly rotation zone. Then I could watch for the secondary reaction, and we could get more a significant top. But if you look at this, look at how far it's run, and then compared to this bar. Now, people will panic today because you get a lot of latecomers to the party that will panic, but that does not do structural damage on a medium or longer term. Yeah, if you got it in over the last few days, that's going to hurt. The NASDAQ. The NASDAQ also coming down. If it trades below this 18,790, the potential weekly double bottom is off the table. And it now needs a weekly close. So keep that in mind also. All right. Keep that in mind. You do have a little mini potential double bottom here. If we get some kind of snapback thing. So that's key there. It has nowhere near triggering yet. 19,355, 19,445, and roughly 19,535. So, and again, this may not trigger. So don't just say, oh, there's a potential bullish setup. I'm just going to go buy it. Would not be. I would wait for something. So we have 18,741 to 18,790. Then the next harmonic from retracement level is 18,619. Also remember, this today would, unless we get a very substantial rally, is likely to close below the 62.5, which then triggers the magnet price back down to the 17,930 area. And the next major harmonic cluster before that is 18,345 area. The Dow, continue to remember, the Dow has not hit the first target on the massive weekly double top, daily and weekly double top. So we could still see much more downside ahead in the Dow. In the short term today, I'm watching 41,000, then again the 40,700, then 40,613. You don't have a little potential double bottom in the Dow. So just use retracement harmonics. The Russell, see how we've now traded below this little, this is off the table. There's no more potential double bottom. Why? We traded below the 12 and the 25% extension from this reversed harmonics. You see that? That's why. And we're trading right at that 62.5 and that reverse harmonic, which is a very key cluster. Also, this gets interesting for the longer term thing. If the Russell starts closing below this key level, it was a prior candle body support, but it would trigger the 87.5 rule, and then we could easily see much lower prices in the Russell for longer, even returning to the low area from October and November of 23. We do have a little mini potential double bottom. And there, that's the only little mini bullish setup, and you're fighting the trend on these. So I would not just try to trigger these and go to sleep. Don't go back to bed. VIX elevated. VIX is elevated. Unless we see a substantial, if we see a substantial reversal in the VIX with some of these double tradings, then I'd watch that short-term bounce. Other than that, pay attention to the 28 level. The DAX. Now we have, it's down to the next little harmonic extension, this 22K, 2230 area. dropping below that. The next cluster is about 21,767 to 21,865. On any rally in the DAX, major resistance is now 22,350. We can look at this. Yesterday it did not. It triggered on the head and shoulders. It triggered the confirmation. Between Tuesday and Wednesday, it was confirmed. It's not yet triggered. It'll probably trigger today unless something really strange happens. So on any bounce plays in the yield, I'd then be watching for rollover plays towards, again, we could see a return to September of 24 lows in the yield on the 10 years. So what else do we have? We have the dollar index getting shellacked. Obviously, the double is no longer. By the way, this invalidated it. This move before this huge down move overnight invalidated the double. That's when it was stopped. And the rotation zone has held up nicely. And we just ticked off the 87.5. Remember, we closed back below the 62.5 back at the first week of March. Little bounce in the rotation zone. Couldn't complete the double. Couldn't even get back to the 200. And then we've now completed the 87.5 rule. So am I expecting it to stop here? Probably not. I'm expecting we got some major support down here near the $100 mark. We're trading just above that right now. Crude also. The 72.10 level that was post on slice, and then we've now tanked back down. This is pricing in a pretty substantial global slowdown. Can you hold on one second? I'm having some work done on the house, and I have to actually answer this really quick. Hello?
Hey, good morning. This is Alan with Sierra Curtis.
Yes.
Hey, just called to let you know we're on our way. We should be there around 7:10.
Okay, great. Thank you. Bye. Sorry about that. I apologize. The workmen are showing up just after 7 my time. So that's why I had to answer that. Gold, we already looked at. There's still, from the roll gap, this is a roll gap. There's still a very key support level right about this 30.65. Remember, what do we watch for now with gold? We watch for the secondary reaction. Does not happen today, but that's going to tell us what kind of potential topping pattern we have. So, well, Charles, you think that number was random? Very good, Charles. The U.S. Japanese yen, obviously the downward momentum. This is going to cause some pain for some people also with the strengthening of the yen. Now, again, we're probably going to close below 62.5 today, so we could easily see the yen return to 142 and the low area from September. These low areas from last September are calling now. Euro, after hitting the first and second targets, obviously the double is over and completed the 87.5 rule. Remember, that was still the magnet price to the upside, separate from the little mini double top, and that's now completed. And there's major resistance up here around the 112 area. The 112, not just from the prior highs, but even back from July 23. So it's going to be real interesting if the euro gets back above 113. That's going to be very interesting. Until that happens, there's a lot of resistance up here. Just as there's a lot of dollar support around the $100 mark. Spiders. Key levels below 541.74. Again, if you're going to do anything, trying to do anything bullish, I'd watch the futures for the 1 hour pattern. Other than that, I would not be bottom picking unless this sets up a bottoming pattern. 541.74, then 536 is the 75% harmonic. Also remember, if we close below roughly this 549 level, we shift the 87.5 rule, which could take us to 523, and the low area from August. So that's what we're looking at right now. You'll remember also, because we don't know where we're open, but you're going to want to, wherever the low we make at post open, you're going to want to drag down your harmonics. And then I'd be looking especially at the low area on any rally, separate from what the futures are doing, the low area for Monday, March 31st, as a key first target on any bounce. The Qs, all right, there we go. The Qs are trading 455.11. We have a key cluster at 453 roughly. Key resistance again, Monday's lows on any bounce. And then just drag down your harmonics to where we're going to open. So that's what we're looking at there. Bitcoin holding up better than expected. We still have the potential massive double top playing out. Nothing has invalidated it. So those are still the targets I'm watching for lower. We can talk about more of that in the future. We'll use gold as an example probably. So what else do we have? I'm trying to think. We got a lot of stuff just selling us silver also. Huge drop in silver against very key resistance. So that's up there. Copper finally, after putting in its spike top and reversing, coming back into very key support. So again, this will be another interesting one that I will be watching for a secondary reaction because we are oversold. We have we're spiked down with the Bollinger Bands and we have cycles at the bottom. But for example, this one could not remain bullish on copper. Now we may still make a new low today, but unless it gets above 517 roughly, anything I'd be watching then. If we got above there, then I'd be watching for a retest the high area and a potential breakout, if not a massive double top. Other than that, if it can't really get above 510, I'd be watching for the rollover play. So we'll have to see how that reacts too. Tesla's not much. I mean, there's not a great pattern in here right now. Horrible delivery numbers, but then it rallies on potentially Elon leaving Doge. But then that was denied by the administration. So still caught in this range. The short-term breakout play is above the 200 from my perspective. And that's short term because it's right smack dab into the weekly rotation zone. The only thing more sustained would be on a back above the 37.5 harmonic if it followed through with a move to the upside. Other than that, the key support's 250. You start breaking below 250, retest the lows, we break below that. Remember, this is pretty substantial resistance right there. We break below that. The next minor area is 183.08, and look how that lines up. We just saw the harmonics. Look where that lines up with. So you had prior resistance, broke out, turning it into support, and then we had the runaway move into the election. So that's reinforced. Should we now have a cluster there? And then if that were to break, you have the prior lows from April 24 area just below this 149 area. Now, if we do the retracements, also, let me change the color on this one. If we do the retracements, remember, we have closed below the 62.5. We've hit the 75% harmonic. But look at this. You can't make this stuff up. Doesn't mean it has to happen, but we now have a triple cluster around this 183 area, which is also the 87.5 harmonic from the 87.5 rule. So on any rollover play, that's a very key target. So you have prior resistance becoming support, you have the 12.5% harmonic extension, and you have the 87.5 retracement. So on a breakdown play, Even if this pops a bit into the weekly rotation zone and then rolls over, that's going to be a very, very key level. So there you go, PMG. Charles, as long as everything, use your stops if you are incorrect. Use your stops if you are incorrect. We will have to see how this. I want to see the tick should open pretty negative. So, other than that, what else do we have? That's really about it. So I have to jump to the open. I'm just seeing if we can get to where the tick's going to open. How long until that? Oh, we got about 10 seconds. We'll just keep an eye on that. Then I've got to deal with stuff at the open, then deal with the workmen showing up. So you're very welcome, PMG. So let's just see where this opens today. Where is the tick opening? Yeah, all right, minus 1350. That is a very negative tick opening. So I'm going to be watching if we bounce to see how strong the bounce is and how strong the tick bounce is. And then the next roll over in the tick's going to tell me a lot personally. Okay? So that's really about it. Nothing's been validated. By the way, if these lows were to hold, I would actually shift it to double. I'd use, if this does not make a new low and were to trigger the doubles, I'd shift the double bottom pattern to the conservative side, by the way. Just the reason I had to do it from the left-hand side is we don't know if these lows will hold. Okay. You need a VIX spike? Well, we could get it today. We'll see. Needs a rollover. I pay attention to that 28 level, Sterling. All right. With that, I got to jump. I shall talk to everyone later. Know where your stops are. And I will see you all tomorrow for non-farm payrolls. Bye for now.